flex chart looks like this. And when I just kind of did that with no flex chart, but what normally I would do, before a trade that makes it even easier. This is basically just the avoid doing dumb things chart. And so if I'm on I just want to go to the chart that kind of helps me avoid doing dumb things. This is a part of our dashboards, that we just kind of like built for that particular purpose. I'd say, man, everything I just worked out on that particular chart was great, but now is there any reason that would be stupid? And that's where I go here. And I have a lot of discussion on those other two where I won't spend too much time on it, but you can literally look at these charts at a glance and say, is there any reason a long would be stupid on these different time frames? And I look at, just like anywhere else, I look at all the pressure lines. Are these, is this something dumb I need to look out for? I would
Now,
look at,
when you do this chart, would you change it to PYTH, or is this? I'm not
yes,
sure what.
yes. Oh yeah,
Okay,
you would definitely change it to whatever you're working with. So in fact, let's do that. Let's go to PYTH. So we could kind of see what was going on. And what I could even do, I think I can do it. That one. So another cool technique that I always do is take this, and then in this case, it's a whole different layout we're working with. You can always
right.
delete this later, but when you sync it globally like that, it literally builds that exact, macro level analysis onto all of your charts. And so you can see like just how it looks from all these different perspectives. And that helps you also when it comes to, is this dumb or is there any reason that I need to avoid doing this based on what I see on these other time frames, or is there any reason I would move it, for instance? So you can obviously pull up these pressure lines on these other time frames as well. So we might say like, is it that one? No, not that one. Oh, pressure lines are already on that one. So we might look at, the smaller time frame lines we were looking at, the 1 week. And we know there's some intraday or 3-day pressure lines also that were kind of within this zone. There were numerous, but these are the major ones that are more like the 1 week and 2 week. And then this asset is so new that it's just now, it's kind of a neat thing. It's just now plotting its 200-day moving average. So you've got the high, you've got the close, and you've got the low. And it's like the first day, I think, that it's been plotted. So technically, you may be one of the first people to actually know that PYTH is actually operating below its 200-day moving average. And per Paul Tudor Jones, technically that's bearish. So if you are longing it, it's good that you have these expectations, right? Because you're about to be longing into this line, which really, really good traders will know exists. And so now you kind of almost might want to make this a take profit zone, like take profit 1. But even if you didn't see that, a lot of people may not. I think pressure lines would be the next one. And I think that's also a great reason to, to move your stop loss up as you move into profit on any given asset. I think that's just kind of a smart way to look at it. But kind of cool. It's very rare that you'll have, you'll catch day 1 200-day moving average, but it's just the first day that we have that statistical information because it hasn't been around that long. This must mean PYTH's been around 200 days, I'm guessing. But yeah, so if I'm looking at this long now, just to kind of go through it as another little case study, there are some time frames that do have, those ribbons, and we can use those to kind of see which ones we care about and which ones we don't. And then we can say, hey, actually, we talk about supporting our failure, but man, actually, this 4-hour 200 SMA is actually supporting our success. That's just another, at this point, fourth layer of confluence that says that's a pretty decent place to try to find a support, to try to enter along. And because it's PYTH, it's a little crazy and volatile. Somebody may choose not to put as much money in as an absolute value. And when in doubt, lower leverage. If you're thinking about doing something at 5x and you go, I don't know, well, you'll never go wrong lowering leverage. I mean, the worst case is you don't make as much as you planned, but when it goes against you, you also lose, a lot. It's a lot slower for your stop to get hit. Like Scarto was playing mobile last night, and that's a crazy little asset, super volatile. And I heard out of his mouth on Discord, this is the most relaxed and drama-free trade I've been in since I started. And I was like, that's really weird coming out of mobile, which is like 0.006, in value. But so again, looking at this granular chart, we just found something that supported our decision. And here's another one, right? This is the 24-minute, but it's just saying here's a really long-term moving average ribbon for the 24-minute long-term moving averages that are supporting our success. It'd be opposite. It would be exactly the opposite if we saw that they were right here. Then that would immediately be the don't do this, dummy signal, right? Which is why we look at this chart specifically, because usually there's something on this chart that would be obvious and that we will regret if we didn't go look at it. But in this case, so far in each of these like kind of like swing trade, scalping swing trade timeframes, so far nothing, right? Even at this, I go, oh, it's a bearish channel, but look, there's two bullish channel breaks, which is why it's reflected here in the bullish channel breaks on the 24-minute. So that's kind of nice. And we kind of, based on our thesis, we actually needed this down pressure to show up to make it to our entry, right? To our macro entry. Like it could not make it to our macro entry without some form of down pressure showing up on those tiny time frames. So that's kind of like natural and accounted for. The thesis that we made was based off of like 400 hours of channel. So this isn't something that would scare me. This is just something saying, yep, I needed that. I needed that down pressure so that it could go into, my entry zone. And the entry zone is large because we're also counting on volatility. So it wouldn't be crazy that it does, any variation of this. I mean, really cool when it does it just like that. And
Right, that's ideal.
yeah, when you spend no time in the red, but that's kind of accounted for, and we've made peace with the risk. So this is an example of like technically, volatility there that we kind of need to show up for our entry to even hit. And we have to just keep in mind, like our entry is based on this time frame over here, and the fact that we've seen that channel respected highly on the bottom side. And even though we have seen some strong deviation on the top side, we're hopeful that we would see the same exact thing, right? Like more deviation on the top side. And so as we look through these, just to kind of finalize this look and this review, we go, oh, we're operating on the top side of the 200 for that one, top side of the 200 for this one. And then this one, would not get by us. I usually, just so people know, for me, I usually look at, as I get to this last frame, I don't know why, it's just become my habit to take a quick glance at I usually leave this as the 4-hour, but I usually will take a quick glance at the 1 day. And for some reason, I'll take a quick glance at the 3-day. And sometimes those pressure lines plot differently on those. And so usually I'll just kind of double check those for any glaringly stupid things that I shouldn't do. And so if we know that I'm on the 1 day here, the 1 day actually looks decent. It's not, there's no real confluence, right? On the 1 day, it's not bullish or bearish. In fact, it's, probably loose bullish, but it's not even yellow, right? So if anything, this could actually imply that we had strong up pressure and then it weakened, and now it's, fairly weak. This appears to have closed a red candle. So even though it's still yellow in confluence, it actually closed bearish. So it, we've in other words, we closed here and now price action is here. So since that candle closed, which was last night at 7 p.m., as it always is, give or take, we're actually technically bullish, like in real time price action. So I kind of like account for that. It did close yellow. I don't see anything glaring on the 1 day that makes me feel it's just completely stupid. 4 hours, probably even more, more of a question. I would probably pull up the monitor. So I want to look at all of that while I'm assessing. And as I look at the 4 hour on this one, I see, let's see. Actually doesn't seem right. This might need to flip, but I say that because the linear regression is bearish here from what I can see in slope. So we'll see if that doesn't change. But as I look at it, like I said, I always look at these regardless, because I want to see the ribbon. And so in this case, it's kind of hard to see without removing it. So I guess I'll just remove it. Oh, that's why. Okay. So the reason that was off is because I must have, in a custom analysis, changed the linear regression to be less sensitive. So it was actually showing me the 200 linear regression. We're kind of operating off the 1, which is a bit more sensitive for what I think we usually do. So in this case, this is technically a 400-hour channel. So actually, if you see that, deviating, there's usually a reason to it. That was the logic right there. So this is a bullish channel. It's good. This is a bullish channel that's breaking more bullish, from what I can see. And that one hasn't shown up yet, but when it does, this line here, when it really starts to break bullish, this line here will show up as a green dot, and that would be even more advantageous for a nice move upward. So as I look at this, it's kind of mixed. So it's not, the best data for a long. I would love to see more bullish data, and you would only get this out of an asset with more history probably. But if this was like a lot of green and we had this same setup, I would say it'd be even better. But we have the logic that we have from, that long discussion that we kind of went through. And I think it's still very, very good overall. So we can see our trade here on the 4 hour. We actually have more of a reason that this would actually be successful, because if I remove the linear regression, we can now see that ribbon more clearly. And we also probably have a reason to not long right here, right? Because we'd say, why would I long right before a red volatility cloud, which I know is probably going to be a solid resistance. So it kind of like meets that check for our don't do anything foolish. But if you're entering down here, that's a much more intelligent entry, even if your goal is to see this thing broken. You believe that it will break, just needs to be given a little more time. But by the time you enter and price action is back up here testing it again, your profits have probably already been secured if you're doing it right. You've moved up your stop loss, and you don't have to really like worry about that anymore. So entry is pivotal, right? Entering here is kind of like foolish, and then entering here is intelligent, right? Because like I said, the goal would be to get that move, and then hey, even if you're here, even if it didn't work out, by this point, you're actually profitable and you're safe, relatively speaking. You can move your stop loss up and make some different decisions. We talked about how you can set alarms for anything. Even just with the regular trading view tools, you can set some really nice alarms just to alert you as to where price action is. So it's funny that this is kind of moving in the direction of our entry, but this is kind of a nice thing because we've had a clear breach, and it seems like, we have the potential to really just be retesting that over a larger time frame. And so that's where you can't really see it. So you have to sometimes do something custom to make it visible. But what you could do is you could say, okay, if I know there's a major support potential right here with this 4 hour ribbon, and if I believe that that's a very likely a major support, I want to draw that, but I want to look at it from a 1 day perspective. And so I would come and, I would basically like draw it, and then it shows up obviously when I change my charts, and I go, that's great. Most of like 66% of that green box is my trade zone. And so if I wanted to be more conservative, I could just drag this and drop it a little bit. But I think it's good, the way it is. And I also like that I have even more support for my plan here, with this 21-day EMA, which is the white line. And I also see my movement monitor intersecting, may even get a crossover, which looks likely, right? After a ton on the daily time frame, this could be a big move, potentially, right? Because the daily time frame has been playing around, and it's never really been this close. It's not a situation where it happens often that it's flirted with it and then fallen. This one has actually not ever really been this close to crossing, not in quite some time. And so like this is just more support for our thesis that, gosh, there's a fifth layer. We literally found now a fifth layer of reason to believe that support, is pretty strong. So even if we're wrong, it's amazing that we have that much statistical probability behind us. Because we have the movement monitor for the 1 day and the 21-day EMA. And so now we can, if we want, actually go and ask ourselves, do I want to move it a little bit, or do I want to move my stop loss a little bit, only because it'd be a shame if it bounced right off of that EMA and I wasn't in the trade, right? So is it worth it to go a little further? And then if you say no, because my rule is to not have that loose of asymmetry, then you'd have to ask yourself, am I willing to drop a little bit? What if I miss the trade? Well, for 2 days in a row, it's entered, it's pretty much entered that zone, but it could definitely be kind of sketchy here. So you may have to ask yourself, is it worth it on this one to take a 4.75 and just do like little to no leverage? Because of the extreme probability of success, right? Because we've done an hour's worth of analysis in this case.
Right.
But I wanted to go through all of that because most people are not going to do that degree of analysis. But I mean, it's pretty nice to be able to do that and then decide what you want to do from there. And if you happen to get even stronger asymmetry, because those 5 reasons that support should exist in that zone exist, and it happens to allow for even better asymmetry, like an 8, then it's amazing, because then you can increase your capital position, you can up your leverage a little bit, and you have a ton of data supporting your success with literally just multiplying capital, with a very, very well calculated, amount of money at risk. But this is just kind of like, since we happen to be here checking, these others, this is just kind of like another interesting point, right? It may not make it down there. So that person may just say, you know what, I'm going to stick to the one that I had, which was like something like this. But that stuff goes through my head. I'm like, look, it didn't make it here, but here it bounced right off of it. So I feel pretty confident that, again, even if my asymmetry is not where I want it, the reality is that I don't expect it would go below that. And so, people just have to make their decision on something that's that close. But this is otherwise, it looks like a really awesome trade setup from you know, for a volatile asset. There's a lot of assets that respect support lines and channels and all kinds of things much, much more easy than PYTH. PYTH is trying to like pick apart one of the most difficult assets probably in the world.